Hello and welcome to FXcast video tutorials. Before we begin our video today, we need to start off with our disclosures. It's important to know that any symbols used today should not be inferred as a trading recommendation. No matter what form of investing you choose, stocks, forex, futures, options, they all have a level of risk associated with them. You can lose your money. You can lose all your money. So you need to make sure that you have gauge your risk tolerance before entering any trades. Any strategies we use today are for educational purposes only. Future results are not guaranteed. And finally, and most importantly, any investment decision you make is solely your own responsibility. Trade at your own risk. So, we at FXcast have put together a free 5-part trading course. What we want to do, as you look at our picture here of a puzzle, is we want to help you put the pieces of the puzzle together to come up with a high probability trading setup. And we believe that there are 5 aspects to any trading setup, to any trading system, to any decision about a trade that a trader must go through before determining whether or not this is a high probability, this is a trade that we can have a positive expectancy that it's going to work. The first thing we have to understand is, what time is it? And we're going to talk about that in this first video, and that's talking about the types of days. It's important to know the type of day and understand that as you go through your checklist and as you start off in the morning or evening, you can eliminate certain trading strategies because of the type of day, and we'll cover that more deeply in a moment. Then, of course, we have technically speaking, and this is where we're going to talk about technical analysis and how to use and apply simple technical analysis strategies towards creating, again, a high probability trading setup. Then we want to find out what chart patterns and what information. Remember, all the information you really need are on a chart. Price action tells us everything you need to know. And we're going to talk about how chart patterns can help us identify key price levels about entering and exiting our trades. Of course, once we enter a trade, we have to know how to manage the trade. The golden rule of trading is to cut your losses and let your winners run. And understanding trade management, risk management, stops, all of that are very important, because in the end, you have to live to trade another day. Finally, and probably the most important of our free 5-part training course, is the mental fitness for traders. It's one thing to understand a type of day. It's another thing to understand how technical analysis of chart patterns and find good places and to place our trades. It's a whole other thing to actually enter the trade. Mental fitness for traders, the psychology of trading, the trader's mindset is very important in order to be able to produce consistent results on a daily basis. So that's the last video that we'll have as a part of our free 5-part training course. So let's begin. Do you know what time it is? Do you know what time it is? And again, this is not really focusing on a particular time of the day, especially when we're addressing forex, which is a 24-hour-a-day trading opportunity. So it's not like the U.S. Open that's 9:30 to 4, or whatever market that you want. It's more about understanding the types of days. And we all know that we all had some study when we're in elementary school talking about the different types of precipitation and different types of weather and climate, rainy days and windy and thunder. All of these are different types of day, and therefore, as you're watching the morning TV show, news, you check the forecast to help you dress properly for the day. Well, trading brings about some similar comparisons when we're talking about the types of trading days. One is considered a narrow range day, and that's when the market basically is not um, moving along quickly. It's not expanding. It's trading within a small amount of pips. And what you might do is you can begin to compare how many pips are traded on each day in that particular currency pair. And by knowing that, and knowing that for the past week we've only traded 40 pips a day, well, then we know that, one or two things. We may not want to put too much emphasis on this pair until it breaks out of that range, because we have so many currency pairs. One of the great things of forex is that you're not sitting around waiting for one uh, symbol to work. You can look at various forex symbols and find one that is trending. However, to finish the narrow range, and once you see that a currency pair is now trading at a larger pip range than normal, then we can either say that either the range is expanding, that it's beginning to trend, and we can find breakouts. So these all kind of tie in together. Trending days, volatile days. Of course, we know a trending day simply is when the market is moving in a direction, takes a moment and breathes, perhaps pull back, and then continues in that direction, takes a moment and breathes, pulls back, and continues on. There are different trades that you're going to take on a narrow range day. You may take advantage of that small range and do counter trend trades and than you would on a trending day where you're looking to buy the pullbacks. On a volatile day, maybe there's news releases coming out. There are economic reports coming out that can affect that currency pair. And of course, there's breakout days. And again, a breakout day is could be when the narrow range day is over and we're breaking out, or when we're looking on a daily chart and we're breaking out of a consolidation. We're breaking the new highs. So these are all types of days that we have to identify the right trading strategy. And this is the importance of understanding what time it is and understanding the type of day. Is depending on the type of day, we have to apply the right trading setup, the right trading strategy. And they are different based upon the type of day. By not understanding the type of day, there are some common mistakes that traders make. One of the ones that I see many traders make most frequently is holding through news. They're not aware of the context of the day and not aware of what's coming out on that day. And there's some economic release, there's some earnings, there's something going on that day, somebody's speaking in the finance ministries, whatever it may be, and not being aware that, again, what time it is, and they hold through that release, and of course the market reacts to that release or to that speech, and wipe out profits if not their account. So again, understanding the type of day and the time of day helps us avoid that common mistake. And the other mistake that I see many traders make is holding through dead zone or entering a trade prior to dead zone. And that simply means that there are times in the market where it's going to be in a narrow range, where it's going to consolidate, where it's sort of in a lull. Um, you know, one of the things they say about Forex is find a time when two markets are open. You may or may not believe in that. But there are times when a currency pair will again breathe and maybe consolidate the move that it's in, and traders will enter a trade and they've got to sit through all of that uh, before the market moves either in their favor again. So understanding the type of day and the time of day helps us stay out of and avoid those times of day. And again, understanding the context of the day and knowing that I either on a narrow range day I should be buying the highs. On a trending day, I should be waiting for a pullback and not having to sit through the pullback in a trade. All of these things are important and are avoidable if we understand what time it is. And we at FXcast have a great resource for you. Let me pull that up. Okay, here we go. Yes, so here we are at All Forex World, and this is a great resource that can help us stay in tune with the time and the type of day. And we can come up here to our FX tools, our Forex tools, and come down to our calendar, and this will list for us the various economic releases and let us know again how important they are, how they're going to impact our currency pairs. They let us know what type of time of day that these things are going to happen, to let us know that we should probably exit our trade, any positions that we have, and more importantly, consider holding off on any new trades as we approach closer and closer to that time frame. So this will help us stay in tune with the type of day. So what our Forex World allows us to do is go back to what we talked about before. We need to check the forecast. We need to know, is it raining? Is it sunny? Do I need a jacket? Do I need an umbrella? Do I need this type of trading strategy? Should I be buying pullbacks? Should I be buying and shorting the extremes? Should I wait right now because there's a release coming out? Understanding all of these helps us prepare for the day, but more importantly, it also helps us identify what is the right trading strategy that I should be using based upon the type of day. And what this allows us to do, again, is to be a high probability trader. Being a high probability trader allows us to have a good chance of success, and it's what distinguishes those who are inconsistent, those who are struggling on a day-to-day basis, and those who have a positive expectancy. This doesn't mean that every trade is going to be profitable, that every trade is going to work out. But what it does mean that over time, over a sample of trades, we can have a positive expectancy that we'll have more winners than losers, and also that our winners, or more importantly, our losers will not wipe out our winners. I mean, that's another thing that traders have a problem with. They'll have one winner that wipes out all of their profits for the week. So, being a high probability trader and understanding the type of day as a high probability trader helps us understand the playing field. Again, it helps us check the weather. It lets us trade when the odds are in our favor because we're not trading against the type of day. We're not taking a strategy that, I won't say will not work for that type of day, but there is a lower percentage of that trade working, or more importantly, you have to sit through a long period of time for this trade will actually work, if it will work at all. So understanding the type of day, checking the weather, allows us to distinguish the difference between high and low risk trades. Lou Holtz, who's a coach, famous coach for Notre Dame in the States, once said that pressure is having to deal with something that you haven't prepared for. And so we prepare and we avoid that pressure by knowing the type of day, knowing what times of day. And the other thing that FXcast can do to help you prepare for the day is to use our demo accounts. And our demo accounts allow you to practice and find out what strategies work on various types of day. And it allows you to know that these strategies work on trading days, and these strategies work on narrow range days, and these strategies work after news releases and on volatile days. And you should practice those things before you actually throw real money at that, because that will allow you to be prepared and not allow your emotions. Remember, we talked about the most important is the trader's mindset. Practicing preparing helps you develop that trader's mindset. In the end, you can have the greatest trading system in the world. You can have the latest technical indicator. You could be in a newsroom, a trading room. You could have some fancy dancy newsletter that's telling you when and not to trade. And you may even be able to process and analyze high probability trading setups. But if you can't pull the trigger on that trade, or if you don't know how to manage that trade, it's all for naught. So that's why we believe that the trader's mindset and the mental fitness for trading is going to be one of the most important. So we hope that you will stay and watch all these videos and get the full aspect of how to be a high probability trader, and then how to build that psychological capital to pull the trigger on each and every trade. Thanks, guys. This is the end of video 1. Do you know what time it is? And in our next video, technically speaking, we're going to start talking about how technical analysis falls into high probability trading setups. Thanks again, and I'll see you next time.